Hello, this is Bichelin. Yes, Bitcoin keeps dropping continuously. I think the fear is probably driven by the bears who seize the moment and come out when they sense it's the right time. When Bitcoin hit 100 million and was heading toward 200 million, these guys were nowhere to be seen. But now they've crawled out like zombies, saying things like, there's still a chance or the season is over. Every year, as soon as we hit the bottom, they come rushing out. It makes me strongly suspect they might be people who lost all their money and now have PTSD, ha ha ha. Is the Bitcoin season really over? And why am I feeling so calm about it? I'll explain everything in today's video. So let's get started. Go, go, go! So, what's the most popular bearish fear circulating right now? There may be many, but what stands out to me the most is the issue with miners. It's a common bearish narrative that comes up every time the market drops. It's almost as if it's a standard procedure. Whenever there's a down day, turn on the news, and it's all about the miners. In such a bearish market, YouTubers who bring out on-chain miner data and preach that we're heading to hell definitely get more attention. But as I look at the same miner on-chain data, I interpret it entirely differently. When I see miner-related on-chain data, my heart races with thoughts of a bullish market. When you look at the news, you see articles saying that miners are lining up to sell because they can't withstand the rising production costs due to the increased hash rate. What does it mean when they say the hash rate is increasing and production costs are rising? To obtain Bitcoin, miners operate specialized equipment to participate in mining and receive Bitcoin as a reward. When this mining equipment operates and participates in the mining process, the hash rate increases. If we assume that one miner generates one hash rate, then when two miners participate, 2 hash rate would be generated, right? In other words, you can think of the hash rate as the power of the miners' pickaxes. So, as the news mentioned, when the hash rate increases, it means that the power of the pickaxes has gotten stronger. In other words, it also means that more people are participating in mining. Then isn't that a good thing? It means the miners who left have come back, right? Yes, that's correct. However, if more pickaxes are mining in a limited gold mine, each person will end up getting less gold. I was receiving 2 rewards for mining for 1 hour. As more people participate now, if you mine for 1 hour, you only get 1 reward instead of 2. When the hash rate increases, the rewards decrease, making it hard for small-scale mining operations to cover their costs, which could lead to them dropping out. However, an increase in hash rate means that more miners are participating in the mining process. Since the hash rate also represents the security level of Bitcoin, the higher it is, the stronger the security becomes. I was just watching the news, and here we are. Anyway, so miners are supposedly lining up to sell because the hash rate has increased? Lining up to sell? Let's check if that's really the case. Looking at the on-chain data for the net outflow of miners, it's true that as the news said, they've sold and left. But calling it lining up to sell, the numbers don't seem to support that claim. Now everyone, the on-chain data you're looking at is probably a chart you've encountered countless times, not just on my channel, but elsewhere as well. The way to interpret this on-chain data is that the red-marked areas indicate miners selling Bitcoin, while the green-marked areas show where miners were actually buying. This is where we need to stop and think for a moment. There are countless mining companies listed on the NASDAQ alone. The business model of these mining companies is, quite literally, mining. They mine Bitcoin, and their job is to sell the Bitcoin they acquire. And by faithfully doing their job, these mining companies have grown steadily, as we can see. Now let's take another look at this on-chain data. In these red-marked selling periods, do you see any meaningful correlation with Bitcoin's price? They sell when it goes up, they sell when it goes down, and they sell when it moves sideways. Yes, exactly. That's because these companies are in the business of selling. So when people talk about miner selling pressure while looking at this on-chain data, it's actually a completely natural thing. It's not a bad thing if Michael's father has a bumper apple harvest and moves a large quantity to the agricultural cooperatives market for sale. However, if a large supply of apples hits the market, the price of apples might drop in the short term, which could be frustrating for someone who bought them at a higher price yesterday. But we're the ones waiting for a major Bitcoin rally, right? So what should we be focusing on? It's not about whether miners sold a lot or a little today. The more important question is, what if miners no longer find mining profitable and decide to quit? That's what really matters. Let's take another look at the on-chain data. If it's not about the frequent selling by miners, then what should we be focusing on? We should be questioning these green buying points. Miners are producers who generate Bitcoin through their mining operations. So why are they not only holding on to the Bitcoin they produce, but also paying extra money to buy Bitcoin from others? I believe the answer lies here. Bitcoin miners are perhaps even more closely tied to Bitcoin than ETF managers like BlackRock or Fidelity. security. This suggests that they see a bright future for Bitcoin. Digital gold, digital dollar, strategic reserve asset. To be honest, I can't say for sure what Bitcoin will become at this point. However, the reason I'm not too worried about the current downturn might be similar to the miners' reasoning. It's because of the expectations for Bitcoin's future over the next 1 to 2 years. For those of you needing some mental reassurance, I suggest focusing on what I'm about to say. I used to be a full-time stock trader before moving into crypto. In the stock market, the themes that show the most explosive growth are pharmaceuticals and biotech. Dementia treatments, hair loss treatments, cancer treatments, and so on. Just by going through phase 1 or phase 2 clinical trials, the stock prices can increase by several times or even tens of times without even selling the actual drugs. Why is that? It's because of the anticipation. Even though no one knows exactly how much revenue a newly developed drug will generate, when there is hope and anticipation that something revolutionary will change the world, stock prices reach their peak. Ironically, when that hope becomes reality, the prices often drop instead. This principle is also well reflected in the stock prices of game development companies. While a new game is in production, the stock price rises due to expectations of a big hit. However, once the new game is released, the stock price often falls. So, what kind of expectations are there for Bitcoin? Throughout Bitcoin's journey toward surpassing 100 million, there have been various expectations. The desire for digital gold and a digital dollar, the anticipation of recognition from traditional asset markets due to Bitcoin spot ETF approval, and expectations of mass institutional adoption. All of these factors contributing to its rise are well known to everyone. At this point, I can sense a new wave of anticipation building up. It's the expectation around the ecosystem. In the world of blockchain, one of the concepts first mentioned by Vitalik Buterin, the creator of Ethereum, there is something called the blockchain trilemma, a concept first mentioned by Vitalik Buterin. It explains that it's difficult for blockchain networks to achieve scalability, security, and decentralization all at once, and Bitcoin is no exception. Bitcoin has been an extremely perfect coin in terms of two aspects of the trilemma, decentralization and security. No one would disagree on this point. It is a system that sits at the pinnacle of impenetrable security and ownerless decentralization. On the other hand, layer networks like Ethereum or Solana have developed with a strong focus on scalability. As a result, they have become the foundation for a broad ecosystem, including meme coins and game coins that we commonly encounter, blossoming as the champions of scalability. In fact, while Bitcoin quietly holds its position with decentralization and security, scalability has proven to be more appealing to the market. Scalability can strongly attract attention in the market as it drives various issues and raises user expectations to new heights. This is like having a goalkeeper with an impenetrable defense. Even if a player lacks defensive skills, it's natural for an attacking player who moves around and scores goals to make a strong impression and gain popularity with the public. All this time, Bitcoin has lived as a goalkeeper focused solely on security, while watching from a distance as Ethereum, Solana, and other scalable blockchains put on their playful performances. Now, Bitcoin has started to tackle scalability. The best goalkeeper who doesn't allow a single goal is now trying to score one. Stacks, which also participated in the 2024 Bitcoin conference, is preparing an event through the Nakamoto upgrade that will blossom Bitcoin's scalability. Babylon Staking, Bounce Bitcoin, which I introduced in previous videos, Ordinals, which led the BRC-20 inscription earlier this year, followed by Runestone, and most recently, the much-discussed Fractal Bitcoin. I had already decided to invest just by seeing the grandeur of the sleeping giant, but in the past year, signs of this giant waking up and starting to move have been appearing everywhere. Asia tends to follow trends based on price movements, often lagging behind. However, in the Western world, where blockchain is already embraced as a culture, and among Bitcoin lovers in our country, it's hardly surprising anymore. The first page of a new chapter in Bitcoin's history is already turning. While Bitcoin's price may be temporarily fluctuating, the number of transactions within the Bitcoin network continues to rise. Behind the scenes of the Bitcoin chart, the groundwork for the next surge is being laid at this very moment. There has always been a key trigger, a main character, that sets off a bull market. I have no doubt that the trigger for the next surge will be the expansion of the Bitcoin ecosystem. When Tesla hit 400 and started coming down, everyone, myself, my mom, and my dad, jumped in to buy without hesitation. Tesla factories are operating across the country, and everyone is driving Tesla cars. We can see with our own eyes that cars are flying off the shelves at Tesla stores, so the price drop feels like an opportunity. Even if we're seeing temporary losses, there's a strong belief that it will eventually bring profits. As someone who sees the value behind the Bitcoin chart, the current decline doesn't bother me at all. Let me summarize. The reports that Bitcoin miners are selling in large numbers are exaggerated, and their sales are not a bad sign but simply a normal occurrence. It's part of their job. What we should focus on now is not their selling, but their buying. The anticipation for Bitcoin's near future is at an all-time high, to the point where even miners are joining the buying trend. Bitcoin is preparing to open a new ecosystem, and once it becomes visible, it could trigger the hottest rally in crypto history. Let me know if you need any further changes. Beyond the charts, if you have the vision to see the true value, you won't be afraid of small fluctuations. This Sunday, I've prepared a special lecture for value analysis of altcoins. I can confidently say that it will be a video for the top 1% in the world. I'm currently on vacation, but I'm working through the night to prepare lecture materials without taking a break. Please look forward to and watch the video that will be uploaded on Sunday as well. I'm planning a special video for next week. If you're interested, please leave a comment letting me know you'd like to see it. Thank you for watching today's video, and I look forward to seeing you in the next one. Thank you.